what do you mean by self-occupied and what do you mean by let out property? So I'll explain you what about the interest calculation. What is the NAV? Net annual value. Computation of annual value of the house property for the assessment year 2020-2021. You are supposed to remember FMSA. FMSA. Remember that. Hello everyone, this is your ALsir, lecturing Vidhyaashram First Grade College, the Temple of Excellence. So, we are in the session 1 of your topic called income tax. Under income tax, we are doing the chapter, it is called as income from house property. Now, income from house property means what? As I told you, you have 5 heads of income in your income tax. We have direct as well as indirect tax. In direct tax, we have 5 heads. Which are those? First one, income from salary. We completed. Now, second one, income from house property. We are doing now. Next, income from business or profession. Completely we will not do. Only part we will complete in this sem and remaining part we will complete in next sem. Income from capital gain. This will come for next sem. Then, now finally, income from other sources. Income from other source also, we will do it in next sem. Now, we are in the second head, that is called as income from house property. In this, so what will be the agenda for the day? Agenda for the day, it is very simple. We will do concepts, how to calculate, as well as we will understand the format of calculation. Now, not only the format, we'll do one simple problem so that you will understand better. Income from house property. Now, before we go to the definition, I'll give you a brief idea. For example, you have a house. In that, you have 2 houses. One house you are living. One house you are living. And one more house you have given on rent. Now, in this, you have given for rent means this we call it as let out property. What do we call it as? Let out property. We have 2 things. One will be self-occupied. Second one, let out property. So, what do you mean by self-occupied and what do you mean by let out property? Now, self-occupied means you have constructed you have bought a house and you are residing in that house. That is called self-occupied property. Let out property means maybe you have one more house. In that house, you have given for rent. Whatever you have given for rent, whatever rent you are collecting, that house we call it as let out property. Now, so whatever the tax you are going to pay, like income from house property, it is only for your let out property. Now, whatever calculation we are doing, that is for only let out property. Now, as per this, your income from house property. For example, you are collecting 10,000 per month as a rent. 10,000 into 12. So, total how many months we have? 12 months. 10,000 into 12, how much it is? 1,20,000. You are supposed to pay tax on 1,20,000. This is called as your income from house property. Now, in this, 2 concepts we will get. One will be vacant property. Other one will be unrealized rent. What is that? Vacant, unrealized rent. Vacant means what? Like, you have 12 months. Out of 12, 10 months it is occupied by tenants. After 10 months, for example, in the month of October or November, they left. Means another 2 or 3 months, no one was there in the house. That is called vacant. Vacant means no one is occupied. Clear? For example, tenant was there in the month of October on festival season. They went to some other place. Again, they came back. So, October, they were not there in the house. That is not vacant because temporarily they were out, but again they will come back. That is not called as vacant. Vacant means permanently they left, means that is called vacant. Clear? Vacant, you realized. The second part is unrealized rent. Unrealized rent means what? Like during the COVID time, for example, even though it is occupied, they did not get this salary. So they did not get this salary, so they did not pay the rent. They promised that after 2 months, I'll pay you the rent. That 2 months we call it as unrealized rent. If the rent is not collected, that is called unrealized. Always remember, these two words are very important, as well as while doing problem, you have to consider these two. Unrealized, vacant. Vacant means permanently the tenant left. Unrealized means a tenant is there, but due to some reasons, they have not paid the rent. That is called unrealized rent. Now we'll come back to your definition or meaning. The income arising out of a house property either in the form of rental income or in the transfer. Its transfer is referred to as income from house property. Now, so rental income, normally we consider only rental income. Whatever rent you collect, that is called income from house property. Now, in case of transfer of house means what? Selling of your house. So the house is in your name. So you are transferring to some XYZ. That is not income from house property. That comes under income from capital gain. Permanently you are selling your house, that is capital gain. Just you are given on rent basis, that is called income from house property. Now, in essence, any property such as house, building, office, warehouse is treated as house property. So, house property means house, building, office, your warehouse given are treated as house property under the Income Tax Act. Now, later, the income from house property is one of the 5 heads. As I told you, the second head of your income tax is income from house property. Now, second head is one of the 5 heads of income that is taken into account for the calculating the gross salary or gross income of an assessee during the year. So, if you calculate, so how do you calculate your tax? For example, for me, whatever salary I get, on that I am not paying tax. That is not only my income. I have 2 or 3 houses I have given for rent. Whatever rent I have collected, that also added to your salary. Whatever asset you have sold, that also added to your salary. Whatever the other source like your lottery income, interest on your deposit, everything is to be added to your salary. All put together, we call it as total income. If you want to calculate the total income, you have to include your income from house property also. Clear? Yes. This is called your income from house property. Then, how to calculate your income from let out house property? As I told you, we don't calculate income from house property for self-occupied. We calculate only for let out properties. Now, as per this, any house property of the assessee which is given on rent to a tenant even for a few months is to be considered as let out house property. It is not, there is no rule that you should give for complete 1 year. If you are given for 2 months, that also it is a let out. If you are given for 5 years, that is also let out. The month or year is not criteria. If somebody is occupied and somebody is paying on behalf of, they have occupied, that is called as income from house property. Now, here are the steps to calculate income from let out house property. So, these are the steps we are supposed to calculate for income from let out property. Now, what is the step 1? Calculate the annual rental amount received. So, how much rent you have received for the complete year you have to calculate. Second, deduct municipal tax paid. For this, I'll tell you later because we have small calculation for this. Whatever the yearly annual rent we calculate now, we have calculation for that. I'll show you that calculation. Now, then once if it is calculated, like you got 1 lakh or 2 lakh, from that you are supposed to minus municipal tax paid. What do you mean by municipal tax paid? Very simple. Municipal tax paid means whatever tax paid for your property. Like there are two persons can pay the municipal tax. Sometime in the agreement they have mentioned that tenant has to pay. Sometimes in the agreement they will mention that the owner itself will pay the municipal tax. Now, in this municipal tax paid by tenant, we will not consider. Again, I'll repeat, because tenant is not going to pay his tax. We are going to pay our tax. So, we should, if we are paid tax, municipal tax, then only we can deduct from the income. If you are not paid the municipal tax, you are not supposed to claim that deduction. Now, very simple. Whatever income you have collected, from that you have to minus your municipal tax. Step 3. From the NAV. What is the NAV? Net annual value. So, remember NAV. Net annual value. Net annual value. Now, so what is the net annual value? Your actual rent received minus municipal tax, we call it as net annual value. Next, once if it is done, step 3. From net annual value, deduct standard deduction at 30%. Every problem from net annual value, government has given you an offer. It is not offer. Government has given you a deduction called standard deduction. How much? It is 30%. Irrespective of your amount, whatever income you have collected, in that 30% they will reduce. That is called standard deduction. Now, so take your actual income received minus your municipal tax. Whatever amount you got, from that you minus 30% of deduction. Clear? Yes. Once if it is done, net annual value and interest. So, not only your deduction, if you have paying loan for your house. So, for that, there are certain rules and regulations are there. I'll explain you while doing the problem. Now, those interest part we are supposed to deduct. Clear? Yes. This is all about your calculation or steps to calculate your income from house property. Now, I'll show you exactly with the numbers so that you will understand better. So, this will be your determination of income from house property. In this, you will understand how to calculate. Now, gross annual value. As I told you, you have small calculation for this. I'll show you later. Now, gross annual value, you will write minus what? Municipal tax. You have deducted. What did you get? You got net annual value. Now, from net annual value, what we will do? Minus standard deduction under section 24, 30%. Standard deduction is 30% of your NAV. Whatever NAV, for example, your NAV is 1 lakh. On 1 lakh, 30% means 30,000. Clear? Yes. After this, your interest on borrowed capital. So, I'll explain you what about the interest calculation at the time of problem. Why? Because if I explain you now, you will not understand. With numbers or as figures, if I explain, you will understand better. Now, deduct those, you will get income from house property. This will be your final answer. Clear? So, I'll go out of the screen later. Now, you just remember this format. Later, you can take a screenshot. I'll go for the next slide. Next, problem number 1. As I told you, we learned the steps. We learned what is house property, and we will go for one problem. Now, before I go to problem, I'll give you small logic. So, for what? The logic is for Like gross annual value. How do you get your gross annual value? I'll tell you that. Very simple. Now, remember this logic. First, your FM. What is this? FM. Next. Yes. Next. A. What is this? F, M, S, A. You have to remember this. Now, F stands for fair value. F stands for fair market value. Next, M stands for municipal value. M stands for municipal value. Next, S stands for standard value. I'll write down there itself. F stands for fair value. M for municipal value. S for standard value. A stands for actual value. Remember these things. So I have taken a shortcut. F, M, S, A. Fair value, municipal value, standard rent, as well as your actual value. What is the actual value? Whatever rent you have collected from the tenant is called as actual value. What is standard value? Normally in that locality, everybody what they are charging, that is called standard value. Municipal value, as per municipality limit, they will fix one rate. That is called municipal value. Fair value, it is also fixed by them only. The fair rent for this particular house. By looking at the house, they will fix there is a fair rent for this. So that is fair. In your question paper, they will give you all four values. Example, I'll tell you. For example, you are collecting 10,000. But actual they said standard rent is 8,000 for that house. Municipality, they have fixed 7,500. Fair rent, they are telling it is worth of 9,000. So these are the different prices you have, but actually you have collected how much? Actually you have collected, your collected is only 10,000, but different. As per standard value, they are telling 8,000 can be collected. As per municipal valuation, they are saying 7,500 is a fix for this. As per fair value, they are telling 9,000 is a worth for this house. Clear? Hope you got. I am talking about just 1 month, not per annum. Just for the example purpose, I am taking off 1 month rent. So these are the rents available in your question paper, but your gross annual value out of 4, you are supposed to take any one. Again, I'll repeat. This is very important. Why? Because every problem you are supposed to select one out of these 4. Clear? Now, your gross annual value, you need to find out any one out of these 4. Once you have selected any one, later you can go for these things. No more further calculation. It is easy. Copy paste. But for a gross annual value, you have to select any one. Now we'll go for selection. How to select? Now, very simple. Fair value or municipal value. The formula is very simple. Whichever is high. Out of these two, whichever is high, we consider as your answer. Clear? Any doubt? As per this, 9,000 or 7,500, whichever is high, very good. Out of these two, your 9,000 is high. Clear? Now, whatever answer you get from this, you have to compare your standard rent. Again, I'll repeat. Out of this, which one you got? 9,000 you got. 9,000 you should compare with standard rent. Now, whichever is low. Now, out of these two, you have selected 9,000. 9,000 and 8,000, which is less. Yes, you have selected 8,000. Up to this, any doubt? No doubt. Now, your answer and your actual rent, whichever is high. Whichever is high, whichever is less, again whichever is high. Your 8,000 or 10,000, whichever is high, 10,000 is high. So your answer is 10,000. So this will be your gross annual value. Hope you understood. Easy or very easy? Very easy. Fair market or municipal, whichever is high. Your answer, which one you got? 9,000 you got your answer. 9,000 are standard rent, whichever is less. So you got 8,000 is your answer. Now 8,000 or 10,000, whichever is again high. Your 10,000 is the answer. Hope you are clear. Hope you understood. Yes, there is a logic behind this. How to find out your annual value out of 4? High, low, high. Remember HLH. What is a H? FM. What is a L? Yes. What is a again H? For that it is A. Clear? Yes. So this is the logic you are supposed to remember. FM, SA. FM, SA. Remember that. FMSA. FMSA. So that you will remember correctly. Now, so these are your format. I'll go to problem number 1 so that you will do that problem easily. Now, as per this, Mr. A is the owner of the house property in Delhi. Now, construction of the property was completed on 30th November. The property consists of 4 units. Like it is a big apartment. So, big premises are building. In that we have 4 units, means 4 apartments. Actual rent means remember F, M, S, A. Same logic. F, M, S, A. FM 1, S is 1, A is 1. Clear? Now, in this, actual rent received for the each unit 48. 48,000 into 48,000 multiplied with 4. How much you will get? You will get around 1,94,000. So 48 into 4, it will be 1,94,000. Now, your actual rent 1,94,000. This is done. Now, standard rent of the property in New Delhi control 2,20,000. What is the standard rent? 2,20,000. Now, it is 2,20,000. Now, municipal valuation of the property is 1,65,000. Municipal valuation 1,65,000. Make this as formula or code so that easy to fill and easy to do. Now, rent of similar property in the same locality is 2 lakh. That is called fair value. Now, this is 2 lakh. Done. So, we are done with all the information. Now, it is yours. You only have to calculate. I'll give you 2 minutes. Calculate and let me know what is the answer. What is the answer? We have fair value, municipal value, standard rent, actual rent. Now let me know what is the answer. I'll show you the format also. This is a format. Like this you have to calculate. Whichever is higher, whichever is less, again whichever is higher. Now tell me what is the answer. Yes. Now, as per this, you have fair value 2 lakh, municipal value 1,60,000. Whichever is higher. Whichever is higher, whichever is higher. Your higher is 2 lakh. Now, 2 lakh or 2,20,000. Whichever is less. 2 lakh or 2,20,000? 2 lakh. Your answer is 2 lakh. 2 lakh or 1,94,000. Whichever is higher. Your answer is 2 lakh. Hope you understood. Out of 2 lakh and 1,65,000, we got 2 lakh. Out of 2 lakh and 2,20,000, we got 2 lakh. Out of 2 lakh and 1,94,000, we got whichever is higher, It is 2 lakh. Any doubt? No doubt. So we done with this. Your fair rent is 2 lakh. Now, after this, during the previous year is rupees 35,000. Municipal taxes paid. Municipal tax paid 35. We have to minus at the end. So these are the informations we have. We'll go for the answer. So what is the annual value? Annual value is 2 lakh. How come you got 2 lakh? With the help of these logic. Clear? Yes. See, gross annual value they have taken 2 lakh. Remember, working note. Clear? Now, your municipal tax paid is how much? 35. 2 lakh minus 35. Your annual value of the house is 1 lakh 60. So, they have asked you only to calculate annual value. They have not asked you to prepare income from house property. If it is asked, then very simple. Less standard deduction at 30% of net annual value. On this, you are supposed to calculate 30%. So you will get how much? 16,500, again 16,500, again 16,500. It will be around 12, 32, 33,000, 33, 49,500 something you will get. 49,500. Approximate I am taking, it is not exact. So you will get around 1,15,500 something you will get. So these are the calculation you are supposed to do. It is nothing but income from house property. This is I have taken approximate. Okay. So this will be your calculation. Heading, it must be combination of annual value of the house property for the assessment year 2020-2021. Every problem must and should you have to mention the assessment year is 2020 and 2021. So these are the calculation. Your final answer will be 1,65,000. Further, I have done calculation like 49,000 something. So these are your calculations. Clear? Yes. So they have given working out also. How come you got 2 lakh? Better you go for this. This is easy to understand. Clear? Or else if you want this, you can go for this also. Both are same. So I'll go back to all these slides so that you can take a screenshot. So this is your agenda. Your first slide, what is income from house property? How to calculate income from house property? Your determination of income from house property. Your problem number 1. So along with that, I have showed you the logic also. Your solution for problem number 1. Working note for problem number 1. So this is all about your today's session. Hope you understood what is income from house property. What I explained you, that is almost 20 or 30% of your income from house property. I am not saying that it is much complicated or something. It is the easiest what we did today. The same kind of problems only you will get. Small adjustments will be there. As soon as we do as soon as we do each problem, you will understand the every concept of house property. How we did your salary and finally you done with your salary topic. Similarly, we will go step by step. Clear? So that you will understand better. Thank you.